So you're buying a home, your loan is in underwriting, and you're feeling totally lost, wondering who even is the mysterious underwriter?
Wait a minute! Who are you?
And why do they have so much control over my loan? Listen, I've got you. Give me about 5 minutes, and I'll tell you exactly who's behind the curtain and why they're crucial for your financial future. First off, your underwriter isn't some shadowy figure holding and hiding behind closed doors, hoping to ruin your day. They're more like a financial detective whose job it is to carefully piece together your financial story. Here's what's actually happening. When you apply for a mortgage, you submit a stack of documents. Bank statements, pay stubs, tax returns. The underwriter's role is to go through all of these documents carefully, verifying accuracy, consistency, and truthfulness. Think of it like, airport security, but for your money. Sure, it feels a bit invasive, but it is there to ensure your safety. In the underwriter's case, it's about making sure you can safely afford the mortgage without putting yourself into too much financial trouble. But here's the thing most people don't realize. Underwriters actually want you to succeed. You heard me right. They're not there to say no, they want to say yes. So what exactly are they looking for to confidently give you that green light? Underwriters look for stability, clarity, and consistency. So let's unpack those pretty quickly. Number one, stability. Can you show steady income over time? If you've bounced from job to job, that's not really a deal breaker, but the underwriter will look closely at your income history. They prefer stable employment because it means predictable income, making you less risky as a borrower. Number two is clarity. Do your bank statements clearly show that you have enough money for the down payment and the reserves? They'll check if your accounts suddenly spike with unexplained deposits. If there's mystery money, they'll have questions. And number three, it's consistency. Does your financial behavior tell a consistent story? For instance, if your pay stubs are, say, $5,000 per month, your bank statement deposits should match pretty closely. Consistency is key because it shows you manage your finances responsibly. Here's an example. Let's say your bank statement suddenly has a $10,000 deposit out of nowhere. Well, you might say, that's great news, but to an underwriter, it's a red flag. They'll ask questions, and it might delay your loan unless you have a clear explanation and some documentation. Maybe you sold a car or got a gift from your family for down payment. Document it clearly with receipts up front, and you'll be golden. All right, maybe you're thinking, okay, Nathan, but why should I care about all this underwriting stuff? Isn't that just paperwork and I can ignore and leave it to the lender? Well, trust me, knowing this actually puts you in control of your loan process. Look, knowledge is power. When you understand underwriting processes, you're not just blindly submitting paperwork. You're partnering with your lender to make the process smooth and predictable. That means fewer surprises and less stress. For example, because you now know underwriters value stability and clarity, you can proactively prepare your paperwork. Instead of scrambling at the last minute, you'll have everything organized. Pay stubs, bank statements, explanations for big deposits, and just hand it all to your lender, neatly organized. This alone makes you stand out to your underwriter and can speed up the entire process. It also gives you the power to spot and fix potential problems ahead of time. If you're planning to switch jobs soon or make a large purchase, you'll know to discuss these things with your lender first to avoid unintended underwriting red flags. So listen, your underwriter isn't your enemy. They're actually your greatest ally in safely securing your mortgage. They want you to get your keys, move into your new home, and stay financially healthy for years to come. Because why? They want you to repay the loan. Now that you know who they are, what they're looking for, and how you can partner with them, underwriting becomes way less scary and far more manageable. You've got this. And hey, if this was helpful, share it, please. Someone else is probably just as confused as you were 5 minutes ago. We'll see you in the next video.